What's up guys, welcome back to my channel. In today's video I'm going to be sharing with you how much money we're making while we are trying to pay off over $300,000 of debt. So a few weeks ago I posted a video talking about how we have over $300,000 of debt, most of which is student loan debt. And in that video I went into a ton of detail about what all our debts are made up of, how much each amount is, and how much we have paid off so far in 2020. But what I did not share in that video is how much money we make, and I did get a lot of questions from you guys asking, what is our income? I think this is a really fair question actually, because to understand how we're doing in our debt payoff journey, you kind of need to know not just what our debts are, but what our income is. So in this video, I'm going to share with you exactly how much money we make and what percent of that is going towards our debts currently. Now, I am sharing this, one, because you asked, but two, because I don't want my videos to scare people off from going to school just because they think the student loan debt is too crazy. Like, you need to see the other side of the story too, which is that we went to school because we were investing in ourselves in trying to get degrees that would give us a good income for the rest of our life. So while we do have a huge amount of debt, we do make good income, and you know, is that going to be worth it at the end? I don't know. I have to see what, you know, things look like at the end of our lives, but that's, you know, part of the reason that we accumulated this much debt in the first place. So in order for you guys to understand the full story, I feel like it's something that's important to share. Now, last thing I'll say before I tell you our income is, if you like this video, please hit the thumbs up. I'd really appreciate it if you like this video, if you enjoy the content, because it helps out my channel. So as many people pointed out in the comments, if we're planning to pay off $300,000 plus of debt in a little under 4 years, that means we have to be paying a huge amount each year. In fact, it averages out to about $80,000 a year that we'll need to pay off. And so that means our income has to be well above that to be able to accomplish that. So how much money do we make? Together, my husband and I make just about $225,000 a year. Now, I'm not going to break it down exactly between us because we are married and all our money goes into one pot, which a lot of people had comments about, you know, in my last video too, about my student loans versus my husband's and, you know, assumptions about our relationship, but I'm not going to get into that in this video. But generally, each of us makes over $100,000 a year, and then each of us has an opportunity for bonuses, and we each have some side income that we bring in as well, which all totals to about $225,000 per year. Now, neither of us started out making more than $100,000 out of grad school, but we each have been in our careers for several years now, and so we have worked our way up to earning those salaries. So just to give you guys some context, our annual income is about 70% of our current debt total. So for example, if you were making $70,000 a year and had $100,000 of student loan debt, you would have the same proportion of income to debt that we have. Okay, so even though we're making $225,000 a year, that is not the amount of money that hits our bank account each year. There are taxes that come out of our paychecks, of course, there's health insurance, and then my husband is contributing to his 401k up to his employer match while we are working on paying down our debts. So after all of that is taken out of our paychecks, what actually hits our bank account throughout the year totals to about $180,000, which if you break that down by 12 months is $15,000 per month. Right now, as I'm filming this, it is November, and so I don't know exactly how much we're gonna make in November and December yet, and I don't know how much we'll pay in debt during those months, but I can tell you exactly what we've done from January to October of 2020. So when I'm talking about our debts, I like to think of them in two categories. There's debt on our house, which is our mortgage and home equity line, and then there's all of our other debt, which is like our personal debt, student loans, car loan, and credit card debt. So from January to October of this year, we have paid so far $67,510 towards our personal debts. So our student loans, our credit card debt, and our car loan. And this totals to about 44% of our take-home pay going towards those debts this year. Now for house debt, we have paid $21,460 so far, which averages out to around $2,000 a month that we're paying to our mortgage and our home equity line, which is about 14% of our take-home pay that we're contributing to those debts. Now on top of that, because of COVID and because our savings account only had about $3,000 when we started all of this, we decided to increase our emergency fund and put more money into our savings account. So throughout the year, we have put an additional $15,000 into an emergency fund, which is about 10% of our take-home pay so far this year. So if you add all of that up, we have paid $103,970 to our personal debts, our home debt, and our emergency fund. And that means that 67% of our take-home pay has gone to debt or savings this year. So 2/3 of our take-home pay is going towards paying off debt or going into saving, which I am super, super proud of us for getting that done this year. So that leaves the other 1/3 of our take-home pay to live off of, which ends up being around $4,500 to $5,000 each month. Now, out of that amount that we're living off of, we don't even spend all of that because we are contributing to sinking funds. And so this is the first year that we've done that, and that has been really a game changer for us in our budget. And if you don't know what a sinking fund is, basically it's a way to put money aside for an expense that you don't necessarily know how much it's gonna be, or you don't necessarily know when you're gonna have to pay it. So for example, we put $75 a month towards our car sinking fund. And that money is just money we set aside every single month, regardless of whether or not we have to pay something for our cars that month. And then when one of us needs an oil change, or our car needs to be serviced, or something, you know, else happens that's more expensive, we have a pile of money set aside that's specifically meant to pay for car maintenance. And so we can just take money from that fund rather than having to take it out of our regular budget items, because we know that expense is going to come up. We don't know how much it's going to be or when it's going to be, but we know it's going to happen. And so if we set money aside in savings now in a sinking fund, then when it comes up, we don't need to worry about how we're going to pay for it. So that is it for today's video. I hope this provided some insight into how we are doing with our debt payoff. I feel like we've struck a good balance between being super aggressive and working really hard to pay off our debts, while also leaving ourselves a reasonable amount to live off of so we don't feel miserable while we're paying them off. I'll see you guys back here next Monday for our October 2020 debt payoff update, where I share all the debt that we have paid off in the month of October. Thank you guys so much for watching. If you like the video, please give it a big thumbs up. It really helps out my channel. And hit the subscribe button if you want to see more videos like this, and I'll see you guys soon in my next video. Bye.